And let's talk about earnings season. You've probably heard that earnings have been pretty good, but what you may not be hearing enough about is something else. Joining us now is Darrell Cronk, Wealth and Investment Management CIO at Wells Fargo. And Darrell, what I am referring to is not earnings, but you can mess with earnings. Corporations can do some things where it's like, oh, we beat earnings by a penny. How strange. You can't mess generally with sales. How good have revenue numbers been?
Good morning, Brian. You're exactly right. Earnings have a lot of noise in them from the tailwinds, of course, from tax reform and the stimulus. Revenues have been off the charts this quarter. As a matter of fact, somewhere between 9 and 10% is what revenues are going to grow year over year on the quarter, which is one of the best quarters we've enjoyed of this entire economic recovery. Many people in Q1 were concerned about peak earnings, peak revenue growth in Q1, and thought rates would decelerate into Q2 and Q3. That hasn't happened at all. The beats ratio on revenue is the highest we've seen since the global financial crisis. So it is off the charts good this quarter.
All right, well, I guess if I wanted to be glass half empty Sullivan, not glass half full Sullivan, I would say that if the market discounts the future as it does, the future is going to be a lot more difficult because matching these comparisons is going to be next to impossible next year.
Yeah, I think you're right. The comps year over year will get certainly more difficult. And I don't think we have to enjoy 24, 25% earnings growth or even 10% revenue growth to enjoy a healthy upside market. We think the multiples on this market keep trading between 16 and 18 times, 18 on the high side, 16 on the low side. So as fast as earnings grow, so can the indices and stock prices move higher.
Do you think they will?
We do think they will. We think the third quarter, remember the third quarter of this year, which will be this quarter's earnings, is still pre-election, pre-tax reform. So the comps will be fairly easy in Q3. And we still see some really good opportunities. The neat thing about this market is all the dialogue about tech being narrow and the market's breadth being low and focused to a few names, it's really widened out. Healthcare setting new all-time highs, consumer discretionary setting all-time highs, retail's up 20 to 35%. Financials are participating. It's a really healthy market heading into the back half of this year.
Yeah, you know, and we look at politics, and listen, we try to avoid politics. You feel like you need to take a shower after you talk about it, right, Darrell?
That's right.
But I mean, here's the thing, it does matter. So here's it. When you look out and you look at all your models and your Excel spreadsheets and earnings numbers and valuations, all that stuff, how much is the variable of the midterm elections factoring into your analysis, if at all?
You know, that's an interesting point, Brian, because we've gone back and looked at that many times over. And midterm election years, you typically see the market trade sideways and flat through about October. And then almost always, and it doesn't matter how the midterm election turns out, whether it swings Democratic or Republican, starting in about October, when the market feels like it's got some certainty around midterm elections and the path forward, it tends to rally pretty strongly in the fourth quarter. And that trend has held true all the way back to the Eisenhower days for midterm elections.